I just want to tell you that the index would not be possible without generous funding that we receive from the Silicon Valley Foundation, Silicon Valley Community Foundation, to underwrite the research that goes into this document and into the website that we maintain. We received additional funding from the City and County Association of Governments in San Mateo County. We're very grateful to them. And then a gift from Microsoft, who very much cares about data, its use, and data penetrating the community. And so they've made a gift as well that helps to support all of the research and the data that you have in front of you in the index. Now, we want you to know, if you don't already, that the index is available online. That's our favorite place for you to experience the index and all of the data that we create. You have a booklet in your hand, of course. The booklet is handy. We're going to be polling you after the conference to ask how important it is to you to have a written document in your hand as opposed to an electronic one. We're interested in your feedback about that. But please be aware that the index and all of the indicators that we track live on a website, and it's called SiliconValleyIndicators.org. You can go to that website anytime. There are hundreds of indicators there, more than are contained in your booklet today. We curate them and maintain them on a daily basis. So you can always go to this website and get the very latest on Silicon Valley. The thing about the website is it has a dashboard. It's powerful. You can bring up the different categories. You can pull up any chart that you like. Then you can even get the underlying information about the chart, the data sources, the aggregations, the definitions. Then you can even download the chart, and you can make it available to yourself on your computer. We want you using this. We want you sharing this information, always freely available. That's the spirit of this thing. All right, so that's the index. It's in your hands, and it lives electronically. Now, let's talk about it. What's happening in Silicon Valley? What's happened to us over the past calendar year? That's the spirit of this presentation. We just want to understand the facts. What happened? Can we review them objectively? And then after an objective review, then we'll spend the day talking about it. What do they mean? What are they telling us? What are our trends? What are our challenges? How do we mobilize to address them? Now, when you're talking about Silicon Valley, I think it's most helpful to think about the valley in two different ways. The first way to think about it is as a phenomenon. I think we understand that Silicon Valley is a phenomenon. It's a thing. It's an amazing phenomenon that takes place, and I think the way you capture the phenomenon is just to say that Silicon Valley is this amazing hotbed for at least two things: innovation and entrepreneurship. And so I would like to talk first today about the phenomenon. And then second, after that, we'll talk about Silicon Valley as a place. And of course, it is a place. It is a swath of land on the surface of our planet, and it poses interesting challenges for how we live and get around here. And so we'll talk about Silicon Valley as a place as well. But let's start by talking about the phenomenon. How is the Silicon Valley phenomenon doing? And we'll begin by talking about job growth. People are always interested to know if we're adding jobs, if the economy is growing in that way. So guess what? In the past calendar year, and by the way, this goes from the second quarter to the second quarter, we added in Silicon Valley 47,000 new jobs. That's more than the previous year. It's an impressive number. In other words, we're continuing to grow. As an economy, our companies are continuing to add to their workforce, and they're locating here. Despite everything, our companies continue to grow, and they're adding those jobs here in the south part of the Bay. 47,000 is the number. San Francisco added about 18,000 new jobs, 18,000. And that, by the way, is a considerable slowdown for them. The previous year, they had 31,000 new jobs, so about half what they did the previous year. Nevertheless, San Francisco also growing. Then you add in Alameda County. This includes Oakland, and they added an impressive 25,000 new jobs. It's a lot of growth, and that's been sustained growth over several years for Alameda County. Oakland, we can say, is coming into its own as a hive for entrepreneurial activity and for headquarters for some major Silicon Valley companies. So Oakland and Alameda also growing. Then when you add in the rest of the Bay Area, there's another 25,000 jobs up in the northern counties, the wine country. And so your grand total is 107,000 139 new jobs. That's what's happening in Silicon Valley and in the Bay Area. It's pretty impressive, especially all things considered. The growth rate for the Bay Area overall, 2.8%. This is ahead of the nation, it's ahead of the state. The growth rate for Silicon Valley alone, just this south part of the Bay, 3.3%. So very impressive growth. Let's take a look at it over time. Here you can see, excuse me, you can see the, this is the Great Recession where we had the downturn for 2 years. But what's amazing to see is that Silicon Valley came roaring out of it. We were the last region to succumb to the recession. We were the first region to emerge out of it. We were already growth positive by 2010. And then we have now put together 7 successive years of job growth. Some fluctuations, but nevertheless, 7 successive years of job growth throughout the Bay Area. Our unemployment rate is now at a historic low. The rate is 2.3%. We've never seen a number that low as long as we've been recording it in the Silicon Valley Index. Now, economists will tell you that 2.3% unemployment is actually full employment, and that's the size of it. Our economy is actually engaging practically all of the people that live in this region, and the people who are not participating are, for the most part, choosing not to participate. So this is very striking about our region. Now, you might be interested to know how our employment breaks down. What's the share of employment? Well, let's say a few things about that. A lot of people suppose that since we're a technology economy and fueled by these growth technology companies, that most of our employment is in tech. It's actually not the case. If you take a look, it's only 25% of our economy. 25% are in what we call tech jobs. And by the way, when we say tech jobs, what we mean are narrowly defined technology companies. They're working on hardware, on software, on internet, on electronics, on the things that fuel our devices and our apps and all of that. So in Silicon Valley, 25% of our workforce are in what we narrowly define as technology companies. Now, these definitions are always difficult. It's fascinating, actually, because technology suffuses every sector of the economy now. I mean, tech is in healthcare, tech is in agriculture, tech is in education. Tech really isn't, it's all throughout business. And so when you look at these other categories, it's hard to say that they're not technology industries. It's also interesting when you think about a company like, say, Uber or Lyft, not technically classified as a tech company. It's technified as a transportation company. And yet, if you think about an Uber or a Lyft, that really is tech. It's fueled by tech. It's tech underneath all of that. And so the categories are difficult, and it continues to be a true statement to say that technology is the driver here. It is driving this economy. However, that's not the whole story. You should also understand that about half of our employment base is in other things, the kinds of jobs that you would find in any place, anywhere that you would live. The jobs, we classify them technically in the index as community infrastructure jobs. And so that takes in healthcare, it takes in education, it takes in retail, and it certainly takes in construction. And there's tremendous growth in that cluster of sectors as well. So what we're seeing in Silicon Valley and in the Bay Area is growth across the board. Now, you might be interested where the growth is taking place. And so we'll talk about that. The biggest amount of absolute growth in terms of absolute numbers was in community infrastructure and services. And that was also the case in San Francisco. That's where we're adding these jobs. And the jobs, like I said, are in everything. Restaurants, hotels, that's actually a burgeoning area for our region right now. Construction jobs are taking an uptick. But I'll tell you something else that's really interesting. The emergence of healthcare. Healthcare is an interesting story that we need to be talking about and writing about in the Bay Area and certainly in Silicon Valley. It's experiencing growth as a sector in terms of its employment. That's not a surprise because we're an aging population. But it's also experiencing considerable growth in other ways. For example, the healthcare sector received huge amounts of venture capital funding. It has become the second largest category for VC investments. It's now accounting for 27% of all VC investment. The biggest deal to come out of Silicon Valley this year in terms of mergers and acquisitions was a healthcare deal. It was Gilead acquiring a healthcare company called Kite Pharma, and that was a $10 billion acquisition. So that's another healthcare story coming out of Silicon Valley. The biggest mega deal from VCs going into healthcare companies was for a cancer research company called Grail, and that was a $900 million mega deal. So, like I say, healthcare is a very big story, and if you're wondering where the growth areas are, well, that's it. It's tech for sure, but it's also community infrastructure and services, including healthcare, in a dramatic way. So, you might be interested to know about how we're growing in other ways. And so if you look at, we talked about the growth in terms of absolute numbers, but if you want to talk about it in terms of percentages, that's also interesting. And you can see that the fastest growing sector in terms of percentages is also what we said, healthcare, community infrastructure and services. But then right behind that, I want to highlight biotech, which even though it's a small portion of our overall employment, it's growing the fastest. It's growing at a 9% growth rate. So that's interesting. Now, you can also ask if we're shrinking, if there are significant sectors that are experiencing job losses. And the answer actually is no, not to speak of. The economy is growing more than shrinking. Yes, there are some sectors that have shedded some jobs, and one in particular is semiconductors. But that's an old story. Semiconductors and related equipment manufacturing, that is an industry that continues to shrink in Silicon Valley as we move the manufacturing to other regions, and Silicon Valley continues to become a software valley and a place where coding is taking place and programming and all of the rest. So that's your story. Now, if you are intensely interested in the composition of our employment and how every one of those subsectors is changing year to year, then Appendix B is for you. You'll love Appendix B. It's in the back of the index. I always spend a lot of time in Appendix B. Now, I also want to point out another very interesting trend. We talked about tech and how tech is driving the economy. Yes, we're adding all kinds of tech jobs. Guess what? Most of them are coming from just a handful of companies. In fact, Apple and Google and Facebook accounted for, just about half of it. Half of the growth was Apple and Facebook alone. And so there's an interesting transformation happening in our valley, where we used to be a valley of lots and lots of companies, many of them small and medium in size, and of course, hundreds, if not thousands, of startup companies. That is changing, and it's like we're going back to the future, back to the 50s, 60s, and 70s, when Silicon Valley was typified by a few large companies, Lockheed and HP, and National Semiconductor and Intel and so forth. And so that seems to be happening again, as the bulk of our employment is actually happening at just a few companies: Google, Facebook, Apple, Netflix, and a handful of others. By the way, when we look at startup activity, there is a drop in startup activity. Now, don't be overly alarmed by this measure. Startup activity can be measured many different ways, and it is laced with complexity and nuance. Nevertheless, here's a chart that's showing you how many brand new companies were qualifying for seed funding in those early stages, A round, B round. And the number has dropped over the past 4 years significantly. It fluctuates, and we'll see if that continues to fluctuate. But right now, what's interesting about Silicon Valley is that the growth is being driven more by large employers and a few of them. And that's a new finding for us coming out of the index. All right, so that's how the innovation engine is doing. Let's talk now more specifically about the phenomenon of innovation, entrepreneurship, and investment, and talk about if we're firing on all of our cylinders there. So the first question is always venture capital. People want to know what the trends are with venture capital. Well, in 2014, we were pretty impressed because we cracked $20 billion in venture capital spending in our region. That was a very big number. We'd never seen a number that big since the dot-com craziness in the year 2000. So that was a great year. And then in 2015, we were shocked because we exceeded that. And we reached about 27, $28 billion in venture capital funding. And what was so interesting was that San Francisco had actually displaced Silicon Valley for the first time. There was more venture dollars being invested in San Francisco companies. And then that trend continued. In the next year, people, I remember journalists and so forth, were very concerned that the numbers fell from the previous year. And that San Francisco investments continued to outpace Silicon Valley's considerably. Now, San Francisco's were, for the most part, mega deals. Remember, a mega deal is a round of financing that is in excess of $100 million. So here is San Francisco outstripping Silicon Valley, but really it was only just a few mega deals that accounted for San Francisco's base of venture capital funding. All right, well, here we are in the most recently recorded year, 2017, and look at that. We have exceeded the previous year. The number is about $25 billion. $25 billion in venture capital. So for 4 sustained years, we've been $25 billion or more in venture capital coming out of our combined region. And then it's very interesting that Silicon Valley has supplanted San Francisco. Now, who knows if this is a long-term trend, but people that were following that trend are very interested by it, and now the trend is broken. Here's Silicon Valley back in first place in terms of venture capital. Now, this gives you a long-term view of what's happening with venture capital, and what you can see is that for 4 years now in a row, we've just been at very big, very robust numbers, far exceeding anything that preceded it. And then there's that one crazy bar, and that was just 2000. And that's now practically 20 years ago, and yet people still refer to it. And I just want to encourage people not to do that. We shouldn't be comparing ourselves to 2000. That was just crazy. That was a crazy year that didn't mean anything. It was just a case of the engine overheating. But nevertheless, you can see that we're starting to approach those kinds of numbers, and we're doing it in a climate that doesn't have the feeling of being a bubble. So that's actually quite interesting. But I think there's something even more interesting that we should point out, and that would be that so much of the venture capital spending right now is in mega deals. Last year, Silicon Valley's share of venture capital didn't have many mega deals to speak of. This year, the mega deals are outpacing San Francisco's. There are 23 mega deals. Remember, that's more than 100 million. 23 of those in San Francisco, 23 of those in Silicon Valley, 16 in San Francisco. So that's a 39% total. Let's put it another way. In San Francisco and in Silicon Valley, we had about $5.2 billion in mega deals. That's a total of around $10 billion in mega deals. That's almost half of all venture capital funding. So venture capitalists right now are spending a lot of money, investing a lot of money, but they're investing it in mega deals and putting it in a smaller handful of companies. And there's your trend. Now, you might be curious to know where it's going. Well, what's striking to us is, number one, that it's going where you think it is. It's going into software, it's going into internet companies, it's going into applications, it's going into companies that are feeding that phenomenon. So that's the first thing. We're not surprised by that. But the second interesting thing I mentioned previously is that it's going into healthcare. Venture capital spending in healthcare doubled over the previous year, and that's emerging as an important sector. And then finally, we see that it's evenly spread over all the other categories. Peripherals, industrial, electronics, energy, food and beverage. It's an interesting mix. So that's your venture capital picture. Now, this venture capital is fueling innovation, and we try to measure that any way we can. We think the best measure is patents. So the number of patents that are coming out of our region. We'll take a look. 19,000 patents came out of Silicon Valley in the last calendar year. That's the second highest number that we've ever recorded. So this trend just continues upward. It just upward and upward, year by year. We're inventing more and more. It continues to happen. It's fascinating to me that our patents account for 54% of all patents in California, 15% of all the patents in the United States. Remember, we have less than 1% of the nation's population, but we have about 15% of the nation's patents. It's also fascinating to me to think about it in terms of patents per capita. Guess what? In Silicon Valley, you're living in a place where 6 out of every 1,000 people have a patent. So this is a room of 1,300 people. Probably 9 of us have a patent. I should ask for a show of hands. That's the kind of place that we live in. You might be curious about the initial public offering. I don't have a lot to say about the IPO. We're scratching our heads about it. The number was 9. There were 9 IPOs coming out of Silicon Valley in the past calendar year. There were 4 that came out of San Francisco. So that's a grand total of 13. The state had 26, so we accounted for half of the IPOs. That's all I can say. We had 9 the previous year. The year previous to that, we had 23. So we're not sure about the trend and what it says. We can tell you that the IPO is not necessarily the exit of choice. In fact, there are a lot of downsides to an IPO. And it's clear that our companies are also favoring other exits, and in particular, being acquired, being purchased, experiencing some kind of a merger or acquisition. So that seems to be happening. By the way, the IPOs are across the nation, spread across lots of different industries and sectors, but in Silicon Valley, they're all in tech, all of them. Everything's in tech. It's internet, it's software, it's hardware, it's computing, with the one exception, and that was a healthcare company. But in the previous years, there were more healthcare companies getting IPOs, so that adds to our healthcare story that we're telling. Lots of healthcare IPOs over the past 5 years, one, a major one, in the last calendar year. All right, so you're getting a sense of how the innovation engine is firing, right? Now let's talk about commercial development. We'll do this quickly. We're building. You've seen it. You see cranes all over the place. You see construction projects everywhere. So we've done a lot of commercial development. The numbers are about 6 million square feet of completed commercial development. 6 million square feet. That's about 160 football fields. That's what that is, if you were to total it all up. So we're building, and not only building, but completing. We have completed all kinds of commercial development. And by the way, it's mostly office space. Some of it is R&D, some of it is warehousing, some is retail, but for the most part, it's office space. And then you might ask what's in the pipeline. Well, there's a tremendous amount more in the pipeline. So not only are we building and completing, but we're also approving all kinds of commercial development. And we're doing it at record levels. So in the past calendar year, we approved 12 million more square feet of development. And that's going to be happening over the next couple of years. You'll be able to watch it, 12 million square feet. Now, by the way, if you total up just the past 3 years of commercial development, it exceeds all of the commercial development that happened in the previous 10 years combined. That's the kind of growth spurt that we're having in terms of our building and development. Now, this chart doesn't even include some major things that went into the city of Fremont's master plan. The city of Fremont master plan also includes Tesla, major expansion at their plant, also major new developments at Warm Springs and Technology Park that's being developed there. It's in the master plan, but there's still a couple of approvals. But if you were to add that in, then the story is even more extraordinary. So I want to put it to you this way. Let's, again, imagine a football field, all right? So there's one football field. Now, if you take all of the development that we have just approved and you include what Fremont is contemplating, that would be 306 football fields. That's what's going on. Yeah, right. That was Fremont, by the way. I heard clapping. Right. That's the kind of development that's going on. Now, it's interesting to point out that the way that we're building is also changing our landscape. So here's how we looked in the 1970s. We were famous for this, just nondescript, boring, very plain, tilt-up construction. Well, the story in the 21st century is that we're building iconic structures, things that are intended to be showpieces for a world audience. So an Apple spaceship, here's Samsung's amazing headquarters. Here's what NVIDIA is doing with their with their new headquarters in Santa Clara. So our landscape is changing. It sort of feels like Florence during the Renaissance. It's that kind of a feeling that's seeping into Silicon Valley. All right, well, we said we were going to talk about the innovation engine, how we're doing, and here's how I think we should size it up. It's firing. We're continuing to expand the growth. We should note is being led by large companies. Venture capitalists are investing at record levels, and we continue to be a capital for innovation. We're continuing to disrupt. Let's shift gears. Let's talk about Silicon Valley as a place. Let's talk about what it's like to live here. So when you look at it from outer space, it seems simple enough. A lovely bay, lovely foothills, a beautiful place to live. It poses challenges that most regions don't have to face. For example, there we are, this enormous body of water that actually is a chasm separating us from our neighbors, north, south, east, and west. Then here we are ringed by hills. So surrounded by water on three sides, then circled by hills, and permanently protected open space. So all of our living, all of our developing, everything that we've just described has to happen in this fixed place, which for the most part is already built out. We don't have developable land. And we don't have the option of sprawling the way that most regions do, because we have these fixed geographical limitations. Trust me, if the bay was land, it would be filled. It would be a bunch of sprawling development. That's how it would be, but that's not going to happen. And so we face challenges, and one of them is how we live and how we get around, and we'll talk about it. So let's do it. What's it like to live in Silicon Valley? Well, let's start by asking the question, how are people doing? Are we continuing to earn, and are earnings increasing over time? Well, this, I want to tell you, to me anyway, is staggering. This is a staggering finding. The average annual earnings for folks living in Silicon Valley are now $130,000. This is average. It's average. Realize there's high earners and there's low earners, but when you take the average, that's the number, 130. This is, by the way, all forms of compensation. This is options, this is stock, this is bonuses, and it's your base salary. 130,000. Guess what the national average is? The national average is 66,000. And so we are double the national average. It's pretty astonishing. Now, there's problems with averages. You know this because high earners will skew the averages, and we have a lot of high earners. There are dozens of billionaires in Silicon Valley. There are 10,000 millionaires in Silicon Valley. And so we also look at other measures of income. You have them in the index. One helpful measure we think is median household income, median. Remember, median is when half the households are making more than that number, half the households are making less than that number. So the median in Silicon Valley is 110. It's $110,000, which again you can see is doubling the national averages and exceeds the state averages. Now, it's there's something to this notion that Silicon Valley is a place where you can come and pursue a path to prosperity. It's also true, however, that Silicon Valley is a very expensive place to live. We know this. We know about our housing costs, but it's also interesting that other costs are on the rise. And the index documented this in your current report. We found precipitous rises in prices of basic things. I'll just give you one example, and that would be childcare costs. Childcare costs have grown precipitously over the past 6 years, to the point now where childcare for a year for one child costs around $20,000, between $20,000, $26,000, $28,000. There's costs for other things as well, food, clothing, all of those things we track in the index. So our prices are climbing. But let's talk about housing. Housing has become topic A. Everybody's talking about housing. Our papers are writing about it every day now. The Mercury, have you noticed, has a story every day about housing. San Jose, Silicon Valley Business Journal stories every week. Every edition is talking about housing. People are now referring to it not as a housing situation, they are referring to it as a housing crisis. That's the term that has worked its way now into a standard parlance. So let's talk about it. Let's just document it. Sure enough, we do have the nation's highest housing prices. Now, bar none. There used to be little pockets here and there, a pocket in Connecticut, in Manhattan, and maybe Washington, D.C. that had higher prices. No longer the case. This is it. We have the highest prices. This, by the way, is census data. It's just It's the census taking all of your housing costs into consideration. So the mortgage, the rent, the insurance, the down payment, any of those things, it's all taken and then divided by the number of people living here, and that's your monthly figure, and it's the highest. Silicon Valley is the highest in the nation, followed only by San Francisco. So that's what we're talking about. Here's another way to look at it. We have the nation's highest home sale prices. Now, this is the median home sale price, and what's amazing here is that this is showing you the top 10 places in the country in terms of housing prices. And guess what? 5 out of the 10 are in Silicon Valley or in the Bay Area. So there's nothing that can approach us. The housing is pretty staggering. And then there's all these surveys and interesting polls and things that come out. This, for example, was Redfin, and it was trying to get a handle on the hottest housing markets in terms of neighborhoods throughout the country. They looked at the whole country, and it turns out that the top 10 hottest neighborhoods in terms of demand for their housing, 9 are in San Jose neighborhoods. So that was Redfin, and then there was Zillow, which did their own thing about the hottest housing markets in 2018, and they looked at 50 regions across the country, and no surprise, again, the hottest market turned out to be the San Francisco Bay Area. Well, here's your median home value estimate. So in San Mateo County, it's now $1.4 million. That's your median. Remember, half above that, half below. And these are home values. So it's taking the whole inventory and it's figuring out where that breaking point. And that's what it is in San Mateo County. And then in Santa Clara County, it's just a little less. $1.3 million is your median home price. Now, we wanted to put that into some perspective. So here it is. If you look at, say, San Mateo County, the $1.4 million house, that's the median price. If you wanted to buy that house, well, you're going to need a down payment of $283,000. That's your down payment. By the way, take a look at the rest of the country and notice that the median home price in the United States is $200,000. $200,000. So in other words, you could take that down payment that you saved up and you can pay cash for a house in any other state. Pick your state, any of the square states, you can pay cash. And yet it's only a down payment in Silicon Valley. So that's pretty discouraging. By the way, amassing a down payment of $200,000 is pretty difficult to do. That would take, if average, and we just saw the average annual earnings are 130, that means you need to be saving the equivalent of 2 years' entire salary just to make the down payment. Then we haven't even talked about the monthlies. Point being, housing is now out of reach. It's actually out of reach for all but a very few. That's what's happening in Silicon Valley. Now, one thing that's driving that is that there aren't any houses on the inventory. We're just not selling the houses. People are holding onto their houses for whatever reason. We can explore this. Yeah, the inventory. This shows you the monthly inventory in Silicon Valley. Guess what? 1,500 houses. That's it. If you want to buy a house, you have 1,500 to choose among. That is all. Now, 6 years ago, there were 6,000 houses on the market every month. So something dramatic has happened. People are holding on to their houses. They're not selling. We can explore that. The housing is not affordable to regular folks. This chart tells you that. This tells you that in Silicon Valley, only 26% of first-time home buyers can even qualify for the median-priced house. There is some news about rental rates. This is interesting, and we can try and process this, but rental rates seem to have hit the ceiling, and they actually fell this past year. We're not sure why. We're only guessing. It could be because we really hit the cap and owners are realizing that it's just not possible to charge those kinds of rents any longer. So there's a little help on the rental side. Well, the question is, what are we doing about it? So how is the region so far responding to what is now being called the housing crisis? Here are the number of residential units that we are permitting. I'll just get to the bottom line. We permitted last year 12,000 new houses, 12,000 new units, 12,000. That's actually a robust number. The previous year was 6,000. So you take all the cities across Silicon Valley, and we have permitted 12,000 new units. So go us, right? Good for us, 12,000. Remember what the job total was? 47,000 new jobs in Silicon Valley against 12,000 new housing units. That's your disparity. Or remember, 107,000 new jobs in the Bay Area. That's a city the size of Santa Clara. So imagine dropping Santa Clara and all of its residents on top of Silicon Valley. That's what we've done in terms of jobs. But we've only approved 12,000 new housing units. Then comes the question is, are they affordable? Are these housing units that we're approving actually affordable? Well, they're not. They're actually not. In fact, most of them are not affordable to people that are making median income or less. In fact, here's an astonishing number. In the last calendar year, we approved 287 new units that were actually affordable to people making 50% of the median income. So we're not putting a dent in the housing. It's just it's not happening. We'll talk about this later, but there's a body of state law, state policy, state guidance that tells every city how many houses they're supposed to add to their housing stock. Well, the cities actually, for the most part, ignore this because there isn't a lot of teeth behind what the state is doing. Nevertheless, this shows you, how much of progress that we're making against the state's housing need assessment. And it's not very much progress at all. But to the extent that there is progress, it is only at the high end. We are adding luxury housing. That kind of housing is being built. But we're not adding affordable housing. That has not happened across the region. And so no surprise, there is a rise in multi-generational households. The share of our population that is living with 3 generations in one household is about a quarter. 25% or more are living that way. This is also interesting, young adults living at home. So people in the workforce between the ages of 18 and 40, are 35% of them are living at home with their parents. And that makes sense given the cost of housing. We wanted to look a little more deeply at this, and so we unearthed this one. We think this is interesting. So you think about people that are now empty nest, even retired, and they're thinking what to do about their housing situation. Well, a lot of them leave. That makes sense. You can sell your house, and then you can buy an entire zip code in Nebraska, right? So that's happening. But here's a chart that's telling you what's happening with the people who are choosing to stay. Now, of our retirees who are choosing to stay, only 13% of them are downsizing, moving into a smaller place, an apartment or something. Only 13%. The rest, 87%, have decided to stay in their house. And so they are living in 3, 4, 5-bedroom houses, but there are 2 or fewer people living in the house. And so we have a region filled now with about 50,000 of those, 50,000 homes that have excess capacity. And you wonder, why is that? Well, who knows? People have their reasons. Some people just want to hold on to their houses, and good for them. But it's also clear to us when we dig a little deeper that there are strong counter-incentives to hold on and not to sell. And one would be Prop 13. Because as soon as you sell and then you move into something else, comparable or less, now you're facing a very much higher property tax rate. And the property tax is stiff. It's really stiff, and in many cases becoming prohibitive. And so people are just staying where they are. That's happening. All right, let's shift gears. Let's talk about income, the income divide, which is also becoming increasingly pronounced in Silicon Valley. This is really striking. So this is what we've been talking about for several years. In Silicon Valley, we're seeing this steady erosion of the middle class. The mid-range jobs, those mid-level professions, they seem to be leaving our region, and what's coming into our region are the high-skilled, very talented people, and they are filling very high-paying jobs. And so look, this is what's happened over the past couple of years. In fact, this is showing you that this is by income range, and we're showing you that we're losing households in those mid-income ranges, and the only places where we're adding households are where the household is earning $150,000 or more. In fact, where we had the most growth is where the household is earning $250,000 or more, and we're adding those kinds of households to Silicon Valley. So there's cleavages now. We're becoming a place that's sharply divided. This also shows you the trends over time. And now about 37% of our households are classified as high-income households. So that gives you a sense. People are always surprised to discover that there's genuine poverty in Silicon Valley. This is for real. Poverty rates are actually increasing in Silicon Valley. We have less poverty in our region than other American regions, so that's the good news. Nevertheless, 8.6% of our population is living in poverty, and that's only as it is defined by the federal government. There are other standards that you could apply. We have those in the index as well. We call them the self-sufficiency standards, and these are households that require some form of assistance from a church, from a neighbor, from a family, from a friend, in order to subside. And 30% of Silicon Valley households are not considered self-sufficient by this standard. You'll also be surprised that hunger is quite prevalent in Silicon Valley. 10.3% are what we call food insecure. They actually do not know where their next meal is coming from. So these are very striking things for us to contemplate today as we think about our overall health as a community. We should also talk about our infrastructure and what's happening there. And the fact is, you already know this, our growth is just completely overwhelmed our transportation infrastructure. So let me just blow through a couple of things. We always like to see where people are originating in the morning and where they're going for their work opportunities. It turns out that about 117,000 people every day are leaving San Francisco, and they're coming down to San Francisco or to the peninsula. Happens on a daily basis. Every day we have discovered that about 120,000 people are leaving Silicon Valley and they're going up to San Francisco. So we have about the same number of people coming and going, and they're passing each other on 101. Or they might be riding Caltrain, although we have some stats that'll show you that. Over the past 10 years, there's been an 87% increase in people leaving Silicon Valley to go to opportunities in San Francisco. Very striking. Well, you're wondering if people are using transit. Here's the number. About 73% of us are driving alone. And that is just fixed. It's like fixed. It is immovable. It is a rock. We cannot seem to change this statistic, no matter what we do. Still 73. In fact, today's Mercury, if you saw it, had yet another poll, and it said that there is nothing that is going to budge people out of their cars. There's just nothing. Not a higher gas tax, not new transit options. People just want to be in their cars in Silicon Valley, and so we have to deal with that. We track how much delay there is because of congestion, and the numbers are off the charts, and I mean that literally. This is the chart that we showed you last year. We showed you that last year, and this year when we plotted it, it went off the chart. It just so we're losing thousands and thousands of hours due to delay. Let me show it to you this way, in a way that makes it personal. What we have learned is that today it takes your average commuter 58 minutes to get to work and to get home again. Okay? It used to be 49 minutes 6 years ago. So 6 years, today it now takes 58 minutes, so we've had to add on to your commuting time 9 minutes. 9 minutes a day. So if you do the arithmetic, 9 minutes a day, make that times a week, 5 days in a week, make it 22 days in a month, and then make that 12 months in a year. What we calculate is that we're losing 37 hours. So that's about a work week. So over the course of this year, you, my friends, are going to spend a full work week in your car. That's and that's just in addition. That's the increment. See, that's the change over what you are already spending. So that's what's happening. Mega commuters are also fascinating. These are people that are driving more than 3 hours to come to Silicon Valley and return again. And that number has doubled. We now have 84,000 people coming from across the Altamont or coming from far-flung places to the south to come into the Silicon Valley opportunities. Transit ridership, meanwhile, continues to fall. And in the past calendar year, 8.5% decrease in the usage of transit. It's a mystery. Our transit providers are working very hard at this. They're providing good service. Nevertheless, there are structural problems here, and it's very difficult to provide transit on the scale that we would need in Silicon Valley on the kind of landscape, sprawling landscape that we have built for ourselves. One counter trend to that is Caltrain. Our choo-choo train is doing what it can. It's going up and down the peninsula. There was a fascinating drop last year, ever so slightly, and we're trying to figure out why that was, but our friends at Caltrain say it's because they're already at capacity. It's not like they can add more capacity. And last year when we measured this, by the way, it was a very wet, rainy winter, and they think that put a dent in their ridership as well. You know, you can ask why transit ridership is down. We'll explore this over the course of the day. These are some reasons for sure. I don't have time to talk about them. They're all fascinating, but there are a couple things that I think are particularly interesting, and that would be the rise of the ride-hailing services. That's been significant. In San Francisco, for example, Uber, Lyft, and the ride-hailing companies are now accounting for about 25% of all trips in the city, intra-city trips. But those drivers, it turns out, are actually coming from outside the city. And they're flooding the city, contributing to our traffic woes, but then putting a very big dent in intra-city commuting. So that's one thing that's interesting. Another really interesting thing is the rise of private company buses. And people have different opinions about those, but we're fascinated to report that the private company buses, the white buses that are going to Google, Facebook, and Yahoo, and so forth, those are now our 7th largest carrier in the Bay Area, only behind Caltrain and BART and Samtrans. So there's been this huge increase in those services. Well, I'm out of time. There's much we could say, and there's more that we'll explore. And remember, the index is your tool, it's your resource. We hope you'll continue to explore it. Let me talk.